Hello friends, welcome, namaskar. And in this session I will discuss all about the budget, the basics of the budget, 5 types of budgeting techniques, 3 types of public funds, what is interim budget, what are the steps followed in the preparation of budget, and all those things, right? So this is basically the public finance lesson number 2, and we will discuss the basics of budget in this session. So first of all, what will be the coverage? As I already told you, budget, what is the meaning of budget, the objectives of budget, the process of budget, 3 types of funds, that is consolidated fund, contingency fund, public accounts of India, then 5 budgeting techniques, right? So first of all, let us understand in general terms what is the meaning of budget, right? So for a common person like you and me, on the first day of our month, we always think that how much money I am going to get this month and how I am going to use that money, right? तो आप अपना एग्जाम्पल लेके चलिए. सपोज you are a student, right? You are a student, so you will be receiving some money from the parents, say rupees 10,000, and then you will be expending this money for different purposes, for fooding purpose, for say traveling purpose, for tuition fees, for buying the study material, and then there are miscellaneous expenses like mobile bill, etc., right? So on the first day of the month, for example on the 1st of April 2020, you are thinking that okay, during the entire month I will receive 10,000 from my father and 10,000 from my mother, or maybe from some other source. Total I will receive 20,000 and I will spend 5,000 rupees in fooding, 10,000 rupees in rent, and 5,000 rupees in rest of the activities. So this thinking process, the thinking process of estimating the future receipts and expenditure is called the budgeting process, right? Now coming to the government. In the government also, we have limited resources. So the government always thinks कि क्या क्या पैसा आने वाला है और वो पैसे को कहाँ कहाँ पर लगाना है, what will be the sources of money and where that money will be spent. So that entire process of estimation of revenue and expenditure, that is called budgeting process, right? So now coming to the formal part. First of all, the word budget, this is a very general word, but in the Constitution of India it has never been used. So in the Constitution of India, this word budget has not been used. In place of budget, there is a word annual financial statement. So this word has been used, annual financial statement. And do you know the article number? So article number is article 112. So article 112 says that annual financial statement will be laid down in the parliament every year, right? So this annual basically means every year. And when I say every year, basically every fiscal year. What is the meaning of fiscal year? So the period is starting from 1st of April and ending on 31st of March. This is called the fiscal years. For example, when the budget is laid down for the period of 1st of April 20 to 31st of March 21. So this is called the budget for the year 2020 and 21. Right? So this is laid down every year, and this is a financial statement. So this is a basically document. And financial, that means it is giving the estimates, estimated figure, estimates about the receipts, so estimates about the receipts and the expenditure of the government. So how much money will be received from the taxes, how much money will be received from selling the shares in the public companies, how much money will be received from grants, etc. Expenditure, how much money will be spent on new roads, how much money will be spent on tackling the coronavirus, etc. Right? So this is providing the estimates. That means this is not providing the actual figure. This is not providing the actual figure. In fact, if we see the real budget, there are three figures or three information which are provided, right? So this budget, for example, the example that I take, this budget is for 2021, right? This 2021 budget, this will be presented on 1st of February 2020, right? So this was presented on this date. This date has already passed. So on this date, three figures will be provided. यानी कि तीन अमाउंट प्रोवाइड किए जाएंगे. One is the actual figures or actual information for the previous year. So this 1st of February 2020, if we are standing on this date, if the budget is being presented on this date, this is 1920, right? We are saying actual information or actual figure for the previous year. So previous year will be 1819, previous year before 1920, right? So previous year की actual figure हमारे पास में होंगी. गवर्नमेंट डिपार्टमेंट से हम लोग कलेक्ट करेंगे कि क्या क्या इंफॉर्मेशन अलग अलग जगह से हम इकट्ठा कर सकते हैं, ठीक है. देन वी हैव बजट एस्टिमेट्स for the upcoming year, the year for which the budget is being prepared. So in this case, the budget is being prepared for 2021. So budget estimates will be given for 2021, and for the present year, revised budget estimate will be given. That is for the 1920 revised budget estimate. So for example, we talk about the health expenditure. So budget के अंदर wherever there will be the health expenditure information, three information will be given, that how much was the actual expenditure on the health during the 2018-19, how much we are estimating for the next year, and for the ongoing year, for the current year, how much budget we are estimating on a revised basis. Why I am saying revised? So when the budget was actually presented for this particular year, right? So budget for this particular year was presented 1 year ago, right? When actual budget was prepared for this particular year, at that time we had some estimate, but over a period of time these estimates have changed, because we have information, the Indian government has an information that coronavirus might impact the country, or some other health issue is emerging. So considering those things, the Indian government has actually revised the estimate of the current year. So this revised budget estimate is given so that more accurate picture can be reflected in the budget, right? So these three figures are given These three figures are given when the budget is being presented. So this is the basic information. Now let us see the term budget is derived from French word budgeter, which means the leather bag or wallet. So before the presentation of every budget, you will see the finance minister entering into the parliament with a leather bag. So that bag is called budget. So this word budget has been introduced from that place. The budget is a document. So this is simply a document containing a preliminary approved plan of public revenues and expenditure. Public means government. And this is a plan, as I already told you. This is a plan of the upcoming year, approved. So this has to be approved by the parliament after it is presented. In general, government budget is an annual means every year, financial statement. So this word is missing, financial. Annual financial statement showing the item-wise estimate of receipt and expenditure during a fiscal year. Fiscal year means the year starting on 1st of April and ending on 31st of March, right? So this is showing the estimated figure item-wise. Item-wise means for every head of expenditure, how much expenditure is being done for the health, education, housing, sanitation, drinking water, welfare of the elderly people, welfare of the children, etc. Not the actual figure, but only the estimated values for the coming year. So for the coming year, we are giving estimated values. For the previous year, we are giving the actual values also. The fiscal year is considered from 1st April to 31st March. Budget basics. Budget is prepared by the government at all levels, right? So budget is prepared by the central government, by the state government, by the municipality, by the Gram Panchayat. So from top to the bottom, every level of government is presenting the budget. However, for our discussion and for our syllabus, we will discuss about the central budget, central government budget, union budget. So more precisely, we will discuss about the union budget. The term budget is not mentioned in the Indian Constitution. Beware, please highlight this as an important point, right? And I hope you are having a notebook and writing down the important point which I am telling you in the class over here. The corresponding term used is annual financial statement, and it has been given in the article 112. It is required to be approved by the parliament before it can be implemented, right? So what is the process? So this is basically the procedural aspect, right? So this process aspect we will discuss now, right? So in India, the budget is presented to the parliament on such date as it fixed by the president. So who fixes the budget date? President of India. Please be careful. In the prelims examination, this question can be asked. Since 1999 till 2016, the election budget, the general budget was presented on last working day of the February, right? So earlier, what happened? From 1999 till 2016, the budget was presented on 28th of February or 29th, whichever is the last day of February. On this date, the budget was presented in the parliament, right? And this budget was presented for the year starting on 1st of April. Once the budget was presented in the parliament, for the subsequent process of approval from the parliament, discussion in the parliament, approval from the president, all that process took almost 2 months process. So it was introduced on the last day of February, and it will be ready to be implemented from the month of May. However, the financial year started from the 1st of April. The budget can be implemented only from the May, but the financial year has already started from the month of April. So this operational difficulty was there, that certain item of expenditure could not be started in the month of April, even if the budget has already mentioned, budget has already given the fund, but this fund cannot be released to the respective ministry because the budget has not been approved by the president till the month of May. So to avoid this discrepancy, in 2017, the budget date was preponed to February 1. The budget date was preponed to February 1, right? So now the budget is prepared, not prepared, presented in the parliament. The budget is presented in the parliament on 1st of February every year, right? Now there is one more concept. There is one more concept of interim budget. So let us see the concept of interim budget. Suppose we take the example of 2019. 2019 is the election year. That means the central government term is coming to end in the month of May 19. But the budget will be presented in February 19 for the upcoming year, for the period from April 19 to May 20. Now, suppose let us take, so actually we have Modi government on 1st of February 2019. So Modi government, which is in place till the month of May 19, because in May 19 the term of the Modi government will end. So Modi government, whose term is ending on May 19, that is just after 2-3 months, is going to present the budget for the next 1 year. So actually the government which is ending whose term is ending on May 19 do not have the moral authority to plan the budget for the next 1 year, when there are chances that this government may come back after the election, or there are equal chances that this government may not come back after the election. So when the elections will be held in the month of May 19, it is possible that Modi government will come, and it is equally possible that Modi government will not come back. In case the Modi government does not come back, this budget which has been presented for this full year is not basically correctly reflecting the vision of the new government, because the new government might be focusing on some other things. The Modi government is focusing on, suppose, health, education, and the new government wants to focus on, suppose, sanitation, drinking water, etc. I am taking the example, I am not giving the actual figure, right? So to manage this kind of situation in the election year, the budget which is presented in the month of February 19, this is called interim budget. Right? So in the interim budget, technically this word has not been mentioned in the Constitution of India, and technically when the government is presenting the budget on February 19, it does not say especially something about interim budget. But what is the speciality of this interim budget is that the government will avoid taking big decisions, new decisions, big bang reforms. Why that? Because if the government does not come back after 2-3 months, then all those reforms might be reversed by the new government, in case the new reforms are not matching to the ideology of the new government. So even before the implementation, those reforms might get reversed by the new government. So to avoid all those operational issues, to avoid all those policy instabilities, the government will introduce the interim budget. The budget will be general only, it will be as usual only, but the government will try to avoid the full-blown reforms, any big reforms in this kind of budget, right? So this is the concept of the interim budget. There is one more concept, that is vote on account. Vote on account. So the example that I gave, that the budget is presented in the month of February and it gets approval from the parliament in the month of May, and the new year starts in the month of April. So till the time the approval is received, no money can be withdrawn from the fund. No money. So for your understanding, just understand that no money can be withdrawn from the consolidated fund of India unless there is a approval of the parliament. So approval of the parliament is the very much required, or is the necessary condition to withdraw any money from the consolidated fund of India, right? So money cannot be withdrawn before May, but year has already started in the April. So how will government manage the expenses of the April month? From where the government will pay the expenses of the April month? So to manage this expenses of the April month, this vote on account concept is been given. Now this vote on account is only and only for the expenditure, not for the income, right? So if we compare two concepts, that is interim budget and the vote on account. First of all, this interim budget is given or introduced by the caretaker government. Caretaker government means whose term is just going to complete and the elections are going to happen. Vote on account is given by the regular government. Interim budget deals with both expenditure and income. Vote on account deals with only expenditure, right? So technically this is the concept of polity. I have discussed this concept already. One MCQ has been asked exactly on these 2 points in the 2011 year by the UPSC. So please understand this concept carefully and you can solve the question in the examination. Friends, after the introduction of the budget from 1st of February, the process of approval by the parliament gets completed by the 31st of March, right? So now the budget is being introduced on 1st of February and the budget approval is taken before 31st of March. So from 1st of April, the money can be withdrawn as per the budget approval only. So therefore, at present, this vote on account is not to be used. So now this vote on account is not used by the government in general, right? Now you can see interim budget. An interim budget is presented by the government that is outgoing. So this government is also called caretaker government. Through a transition period or is in the last year in office ahead of general elections. I already give the example of 2019. With an interim budget, the incumbent government seeks a vote of approval from the parliament to draw money from Consolidated Fund of India. So we will discuss what is Consolidated Fund of India after this session. to meet its budget expenses before the end of the financial year. The full union budget is presented by the newly elected government, right? So the full budget is again presented in the month of August or September. So similarly, when the Modi government was re-elected, it came back. The budget was presented in the month of August 2019. That was the interim budget. Now, what are the objectives of the government budget? So in the fiscal policy, we have already discussed what are the objectives of the fiscal policy. This budget is a tool of fiscal policy only. This is an instrument through which fiscal policy is implemented on the ground. So the objectives of the fiscal policy are achieved through the budget. So what are the objectives? Objectives can include reallocation of resources. Reallocation of resources means the taxes are collected from the rich people and they are distributed in the form of subsidies, in the form of welfare measures to the poor people. Or the taxes are levied on the corporate sector and that money is used for providing subsidy to the agriculture sector. So the reallocation of resources is done to achieve the overall objectives of the government. Reducing inequalities in income and wealth. So this is also done through levying taxes on the rich people and providing those money to the poor people in the form of subsidies, in the form of welfare expenditure. Economic stability. This economic stability is ensured when there are ups and downs. So for example, now in the recent time we have been facing the cyclical slowdown. So this cyclical slowdown is to be tackled by providing some kind of welfare measure to the small industries, providing some money package to the infrastructure, providing export subsidy. So whichever sectors are impacted, the government will provide the money in the budget to all those sectors. So through all these measures, economic stability is supposed to be achieved. Then management of the public enterprises. The government has invested huge amount of money in the public enterprises like ONGC, NTPC and then railway, etc. The government either invests some money in those enterprises or it can also receive the dividend, profit, all those money from those enterprises. So the budget is deciding the policy regarding that also, right? So overall, this budget is actually the basically the practical implementation of the government vision. Some government is having the vision to focus upon infrastructure. Some government is having the vision for focusing upon industry. Some government is focusing upon education. For example, the Delhi government. So by reading the budget, you can see that what is the focus area of the particular government. If you read the budget of the Delhi government, you can clearly identify that they have increased expenditure in the education head. That means they are focusing more upon the education. So this budget is actually reflecting the thought process of the government. Therefore, budget forms very, very important part of the all government activities. The opposition is always ready to attack the government regarding the budget, because when government is focusing upon education, opposition will say you ignored health, you ignored roads, etc. So all those political activities keep happening. So this budget is also very, very crucial political controversial document also. Now, what are the steps involved in the government budget? So there are three stages. One stage is the preparation of the budget. Preparation of the budget, right? So budget preparation means the Ministry of Finance will collect the data from the different ministries, will ask for their requirement, how much fund they require. It will estimate how much tax we can collect from different sources like GST, income tax and other sources. Then Second step is enactment. Enactment means the budget will be introduced into the parliament and the process of approval by the parliament will start. The process of approval takes around 2 months. And finally, when the process is completed, the president grants the approval. So entire process of approval by the parliament is called enactment. The third step is execution. So once the budget is approved, the central government starts executing. Executing means it will start disbursing the money to the required stakeholders, different ministries, different government agencies, and it will also start collecting the taxes from the people. It will start raising the money from loans and different sources. So these are the 3 steps. Number 1, preparation. Number 2, enactment. And number 3, execution. Right? Now let us see each of the process in detail. So the first process is the process of preparation. Right? So this preparation process is done by the Ministry of Finance. In the Ministry of Finance, please note down the department of, so there are various departments, and the Department of Economic Affairs. Department of Economic Affairs is responsible for preparing the budget document based on the estimated income and expenditure of various ministries and departments sent to the Ministry of Finance. Ministry of Finance prepares the budget, and then budget is presented by the finance minister to the cabinet, right? The Union Cabinet approves the budget, and after this budget is approved by the cabinet, the budget is ready for presentation to the parliament. So this entire process is the first stage. In the second stage, the budget is enacted. That means legislation, right? So the budget is presented by the finance minister to the legislature, and on which date it is presented? It is presented on 1st of February 2020 for the 2021, and similarly every year it is presented on 1st of February. The budget is an instrument of parliamentary control over the financial activities of the government. So there are 2 different pillars of the government. One is legislature, another is executive. Legislature means parliament, Rajya Sabha, Lok Sabha. Executive means the central government, which includes Prime Minister, Cabinet, and other ministers which are part of the Council of Ministers. So this parliament exercises the control over the activities of the central government, and one of the instrument of exercise of control by the parliament over the central government is the budget. So whatever proposal is put forward by the central government, that proposal is examined by the parliament, and only after the approval of the parliament the central government can move ahead, right? Why this? The question arises, why this? So this parliament is basically representing the entire country. It is elected body, especially the Lok Sabha, right? So this parliament is representing the entire country, not only the ruling party but also the opposition party. Therefore this parliament approval is very much required. There is another important aspect, that is Article 265. So in the history, in the world history, you would come across a concept, no taxation without representation. So the government cannot levy any tax on the citizens without authority of their representatives, right? Similarly, in India also, we adopt this principle through the Article 265 of the Constitution. So Article 265 of the Constitution says that no tax shall be levied or collected except by the authority of law. And authority of law basically means the parliament. Next step is enactment of the budget or legislation. So in the enactment, there are 5 steps. First is presentation of the budget to the parliament. So this presentation happens on 1st of February. Then general discussion happens inside the parliament session. The discussion happens in Lok Sabha as well as Rajya Sabha. Then voting of demand for grants happens. The voting is done for each of the item of grant. Passing of appropriation bill. This appropriation bill means the proposals regarding the expenditure. So a separate bill, this bill is basically the proposed law regarding the expenditure. Passing of the finance bill. So in this finance bill, all the proposals regarding the tax, that is the tax proposals are mentioned. So all the tax proposals, they are mentioned in the enactment part. So this is how the entire process of enactment works. And once the appropriation bill, finance bill, voting, everything happens, finally the President of India gives the assent. The President of India gives the assent. This portion is primarily the polity related portion. So you should cover each one of these items in detail in the polity section. Here I am just showing you the process quickly. Otherwise, from the examination point of view, if you want to get into more details, you should go to the Indian polity section from wheresoever you have covered. Coming to the execution of the budget. So once the budget is approved, this budget is put into implementation or execution, right? So for your simple understanding, let me see this process. Let me show you this process. The first was the preparation. So preparation is just like you have like if I go back to the example with which I started in the session, your own example that you are making your own monthly budget. So going back to that example, in that example, this preparation means that you yourself are writing down what is expected, where the money will go, everything. So आप उसको लिस्ट डाउन कर रहे हो. और दूसरा जो स्टेप होता है वो होता है अप्रूवल का या एनेक्टमेंट का. तो आपके पेरेंट्स ने अप्रूवल दी है ना, यहां पर आपने खुद ने की, आप एक स्टूडेंट हो, और फाइनली जब अप्रूव हो गया, वंस इट इज अप्रूव्ड, इट इज रेडी टू गेट डिस्पर्स्ड. तो जब ये डिस्पर्स होने के लिए रेडी होगा, that means it is put into practice or it is implemented, right? Or executed, right? Implemented or executed. So executed means now the same person who prepared, the same person is ready to spend. So student is ready to spend. Now let us connect this example to the union budget. In case of union budget, Ministry of Finance prepares, government takes approval from the parliament, and the disbursement is again done by Ministry of Finance, and Ministry of Finance spends this money or transfers this money wheresoever has been decided in the budget. So this third step is the implementation or the execution. Now, in case of government, this entire process is also very, very important. So this process also assumes importance because in the process of execution, there are three important aspects. First is the collection of money, that is collection from the taxes and other sources. Second is proper custody of the money. Once the money is received from taxes from different areas, then this money has to be kept in proper custody. So this custody can be in three forms. There are three funds for this custody. Third is the distribution or disbursement. So this distribution is also very, very important. Although it has been decided by the budget that which sector will get how much money, but whether that money is really reaching the required person, is there any corruption involved, and other finer details of the disbursement, all those things are discussed in this distribution part, right? So in the execution, the collection of money, keeping the custody of the money and distribution of money. तो अगर आप अपने एग्जांपल से लेके चलते हैं, तो आपने अपने पेरेंट्स से पैसा रिसीव किया, उसको आप अपने बैंक में रखते हैं या कहाँ पे रखते हैं वो आपका, तो पहला जो अपने पेरेंट्स से पैसा रिसीव किया वो कलेक्शन में आ जाएगा. आप उसको कस्टडी आप बैंक अकाउंट में रखते हैं या अपने पास कैश में रखते हैं, अपने फ्रेंड के पास रखते हैं या अपने पेरेंट के पास ही रखते हैं, वो आपकी कस्टडी में आ जाएगा. और तीसरा, आप उस खर्चे को किस तरह से करने वाले हो, किस किस जगह आप कितना खर्चा करने वाले हो. आपने बजट तो किया है, लेकिन एक्चुअली जब खर्चा करने जाओगे, when you have already budgeted, but again when you will go to the actual expanding, again you might have to reassess the requirement, right? So distribution भी important होता है. As I already said कि parliament is the approving authority, so parliament has also set up various committees to take care of all these things, right? So there are various parliamentary committees who will take care of all this process, and once all this process is complete, the parliament will also do accounting and auditing of the entire expenditure. Accounting means it will record the transactions, whatever money has been disbursed to different agencies, those transactions will be recorded in the books of account. So this accounting is done and auditing is done by the C&AG. So a C&AG audits whether the money was transferred for the required purpose, whether the system and procedure was appropriate, whether it was properly authorized. All those things are actually taken care of in the auditing part, right? So all these are part of the execution, where the Ministry of Finance is transferring the money to the different agencies, and the Parliament is also keeping a vigil through the different parliamentary committees and the agencies like accounting body, Controller General of Accounts, CGA. So accounting body is Controller General of Accounts, CGA, and auditing body is C&AG, Comptroller and Auditor General of Accounts, right? So all these things are part of the execution. So you can see over here, execution of budget means raising the revenue. So you have to raise the revenue and controlling the spending of government department. Not only disbursing but also controlling. So once the money has been allocated in the budget, it does not mean that entire money will be spent. It does not mean that even if the money is not required to be spent, it will be spent. We have to control, we have to see the actual utility, even if it is part of the budget, but still when the actual spending is being done, the requirement or need has to be seen. It has three aspects: collection of revenue, proper custody of collected funds. I already told there are three funds. What are these three funds? We are going to discuss in the next slides onwards. Consolidated Fund of India, then we have Public Accounts of India, and then we have Contingency Fund. Three specific committees are constituted by the Parliament. So these are the parliamentary committees to ensure proper control over the public expenditure. One is the Estimate Committee, we have Public Account Committee, and Committee on Public Undertakings. Then there are two more agencies. One is the CGA, Controller and General Accounts of India. Then we have there are two bodies, auditing bodies, C&AG, Controller and Auditor General of India, and accounts bodies, Controller General of Accounts, CGA, C&AG and CGA. Now, three constitutional funds. So these are constitutional funds because they have been defined in the Constitution of India. So there are three funds. One is Consolidated Fund of India, second is Public Accounts, and third is Contingency Fund. So let us see about each one of them in detail. First is Consolidated Fund. So this is the primary account in which all the money which is received by the government and all the payments which are done by the government are routed through. So almost each transaction of the government passes through Consolidated Fund. This is a primary fund. This is the primary fund. And because this is a primary fund, the Parliament approval is required to withdraw any money and for raising any amount from this account. So the income can come from taxes, non-taxes, expenditure can be all kind of expenditure. Parliamentary authorization is required prior to expenditure, right? So parliamentary authorization is required prior to expenditure. So do you remember that appropriation bill? That appropriation bill is nothing but one of the way to get parliament approval to withdraw the money from the coming to the Consolidated Fund of India. So जो हमने appropriation bill पास करवाया वो इसलिए पास करवाया जिससे कि हम Consolidated Fund of India से पैसे निकाल सकें. And in the Constitution there is Article 266 sub Article 1 which is mentioning about this fund. So this is the primary fund, Consolidated Fund of India. Then second fund is public fund. So this public fund is holding those monies which are deposited by the general public, right? So public accounts, let us see. So there are a lot of citizens who are saving their money in small saving account, provident fund, for retirement benefits, for pension, right? So they are saving their money, and government has the custody of all this money. So this money is voluntarily deposited by the people with the government, or in some cases as per some law, rule and regulation, and later on this money will be returned back to the general public. So technically this is the money of the people only. This is the money of the public. This is not the money of the government. This money has been deposited by the public for some time, for few years, because government is the safe place to put in the money, and the government can use this money for the welfare also. But later on in the future, the government will have to return back money to the public. So this kind of money is called Public Accounts of India. So this is the money belonging to the public of India. This is not the government of money. This money is lying with the government, but this money does not belong to the government. So this kind of money is part of the public fund. So public money other than those under Consolidated Fund, and parliamentary authorization is not required because this money belongs to the person, and from whosoever the government has received the money, to that person government can pay the money without any authorization of the parliament. For example, अगर किसी पर्सन ने अपना प्रोविडेंट फंड का पैसा जमा किया हुआ है अपनी नौकरी के अंदर, तो ओवर ए पीरियड ऑफ टाइम अपना पैसा और अपने एम्प्लॉयर उसके एम्प्लॉयर ने जो पैसा जमा किया है, दोनों का पैसा मिला करके जो पैसा जमा हुआ है उसके प्रोविडेंट फंड अकाउंट में, उसकी रिटायरमेंट के टाइम पे या उसकी रेजिग्नेशन के टाइम पे वो पैसा उसको वापस मिल जाएगा. उसके लिए कोई पार्लियामेंट की अप्रूवल की जरूरत नहीं है. एंड दिस हैज बीन गिवन इन द आर्टिकल 266 सब आर्टिकल 2. थर्ड फंड इज कंटिजेंसी फंड. सो कंटिजेंसी फंड आपका होता है एक तरह से इमरजेंसी फंड. कंसोलिडेटेड फंड जो होता है उसमें पार्लियामेंट की प्रायर अप्रूवल की जरूरत पड़ती है. सो इन केस ऑफ कंसोलिडेटेड फंड प्रायर अप्रूवल ऑफ द पार्लियामेंट इज रिक्वायर्ड, बट इन केस ऑफ कंटिजेंसी फंड no prior approval is required. right? And let me tell you the context. What is the context? So this name itself says contingency. That means it can be utilized in case of any emergency. For example, when we are actually experiencing this coronavirus pandemic, it is quite possible that parliament is not sitting and the government might need huge amount of money to provide basic services in case of the during this lockdown period. So this is the emergency situation, this is the contingency time, the parliament is not sitting, parliament approval cannot be taken, but money has to be spent. So these kind of requirement, these kind of necessities are fulfilled from the contingency fund. So this is a kind of extra fund which is kept under the President of India. So the authority under whom this fund is kept is President of India. So President of India has this fund, and President of India can spend up to 500 crore in this fund, and the approval can be taken after spending. But approval has to be taken. You have to keep in mind, approval has to be taken. Approval तो आपको चाहिए ही चाहिए, लेकिन आपको प्रायर अप्रूवल नहीं चाहिए, आपको आफ्टर द एक्सपेंडिचर आपको अप्रूवल चाहिए. तो पर्पस क्या है? अनफोर्सीन एक्सपेंडिचर. और अमाउंट क्या है? 500 करोड़ रुपए. 500 करोड़ इज द अमाउंट. एंड आर्टिकल 267, right? So these are the three funds. So going back, I said proper custody of the collected funds is required. So this custody is kept in all three funds: consolidated fund, public fund, and contingency fund. Now let us see in detail the Consolidated Fund of India, Article 266(1) of the Constitution. All the CFI comprises all revenues received, loans raised, and also receipts from recovery of loan granted by the government, right? So all the receipts, जितना भी पैसा आ रहा है, all the incoming money, the government's expenditure is incurred from the Consolidated Fund of India. So all the expenditure amount can be withdrawn from CFI only with the due authorization of the parliament. Next is contingency fund. Contingency fund is under Article 267. It is an imprest. Imprest is basically the money which can be spent in emergency situation, placed at the disposal of the President of India to facilitate meeting of the urgent unforeseen expenditure. Very, very crucial. By the government pending authorization from the parliament. So authorization is pending. So it means authorization will be taken after the money has been spent. I am not saying, this article is not saying that authorization is not required. It is saying pending authorization. Authorization is pending, right? Currently the corpus of contingency funds stands at rupees 500 crore. The Public Accounts of India, Article 266(2) of the Constitution. Money is held by the government in trust, are kept in the public account. So the monies with the public is having with the government in trust, because the public trust the government, therefore the money has been kept with the government. Small saving collection. So government is running various schemes like post office saving account or post office FDs, or it can be national saving certificate, or maybe some Kisan Vikas Patra, KVP. So there are many saving instruments which are issued by the government, and people keep the money with the government because it is completely safe. Provident fund. I already gave you the example. What is provident fund? Provident fund is certain money which is deducted from the salary of the employees, and that money is deposited in the account, in a particular account, and at the time of resignation or retirement this money is withdrawn and given to the employee. So this acts as a safety buffer. This acts as a retirement retirement benefit for the people. Income of the government that is set apart from expenditure or specific subject, such as road development, primary education. So there are various funds which are made by the government. So for example, government levies education cess on the tax, or higher education cess, or Swachh Bharat cess. So different kind of cess or different kind of duties are levied for specific purposes by the government. So because the purpose is specific, like road development, or it can be sanitation, or it can be education, higher education, because the purpose is specific, this amount can be spent only on those purposes. Therefore, this money is also a kind of public account money also, money only, right? So this is also very, very important. Please keep in mind this money also. Now there is one term called charged expenditure. What is the meaning of charged expenditure? So in simple word, charged expenditure means those expenditure for which no prior approval of the parliament is required when it is expended from the consolidated fund of India, right? So whenever any expenditure is made from consolidated fund of India, the prior authorization of the parliament is required. This is the general rule. But in case of charged expenditure, these are some expenditure which are already committed by the government. For example, salaries of the president, salaries of the governors, salaries of the high court, supreme court judges. So these are the expenditures which are pre-committed, which cannot be stopped, for which we cannot wait for parliament approval. So these kind of expenditure are called charged expenditure. So certain disbursements given in the annual financial statement are charged. That is, so what is the meaning of charged? Whenever you hear the word charged here means no voting takes place for the withdrawal of an amount involving charged expenditure from the consolidated fund of India. So examples can be emoluments of the president, like salaries, allowances, other benefits. Salaries, allowances and pensions of the judges of Supreme Court, CVC and CAG. CVC means Central Vigilance Commissioner. CAG means Comptroller and Auditor General of India. So I wrongly mentioned salaries of the High Court judges. This is not part of the charged expenditure of the union government. Yes, that can be part of the charged expenditure of the state government. That is separate. Salaries and allowances of the speaker and deputy speaker of the Lok Sabha and the chairman and deputy chairman of the Rajya Sabha, right? So the presiding officers of Lok Sabha and Rajya Sabha both. Interest on and repayment of loans. So loan की repayment और loan का जो interest है raised by the government of India. Payments made to satisfy decree of courts, etc. So whatever court decision is there, and because of the court decision, suppose the government is supposed to pay some money, that is also charged expenditure and are not required to be voted by the Lok Sabha. Now about the economic survey. So economic survey, although I have already covered separately in the introduction to the economic survey and budget session, but still I am again introducing you one page of economic survey so that you can again see the difference between the economic survey and the budget more clearly. So economic survey, how it is different from the budget? So economic survey is basically a survey. Survey is basically it is having some observation from the past. What is the major difference between the budget and the economic survey? Budget is for the future, for the next year. Survey is for the past year. Already completed the year which is just to complete. And this difference is major because in the budget we are estimating that okay, our vision is this and accordingly we are going to spend this money on this account, this money on this account. But in case of survey we are observing that okay, we spent this money on this particular scheme. What was the outcome? What was our experience? What are the major economic indicators? Inflation, BOP, different kind of deficit, current account deficit, capital account deficit. What is the GDP? What is the national income? What is the per capita income? All those indicators are basically given in the economic survey. And based upon all those indicators, based upon previous year experience, the insights are also given. Some suggestions are also given. So economic survey is a document which talks about the past. This document is prepared by the Ministry of Finance only under the supervision of Chief Economic Advisor, right? And there is no constitutional requirement to put this document in the parliament. But still, as a matter of convention, this document is put in the parliament, right? So there is no constitutional requirement, but still this is put as part of the convention, and this is put just one day before the budget. So if the budget is put on 1st of February, this economic survey is put in the parliament on 31st of January. So the Department of Economic Affairs, Finance Ministry of India presents the economic survey. So the budget is also prepared by the same Department of Economic Affairs. Economic survey is also prepared by the same department, right? In both the houses of parliament, that is Lok Sabha and Rajya Sabha, every year just before the union budget. So one day prior to the union budget. It is prepared under the guidance of the Chief Economic Advisor, Finance Ministry. It is the ministry's view. Which ministry? Finance Ministry, on the annual economic development of the country. It reviews the developments in the Indian economy over the last 12 months. Summarizes the performance on major developments. So whatever programs are going on, MJ Nirega, Swachh Bharat Abhiyan, how much money we spend and what are our observation about the expenditure. Highlights the policy initiatives of the government. What are the policy initiatives? How is the performance? Prospects of the economy in the short to medium term. So how is the economy is going to be doing? What are the expectations? And nowadays some issues are also highlighted and given in a separate volume. That is the volume 1. So nowadays there are 2 volumes of the economic survey. Volume 2 is all about what happened in the last 1 year in all the sectors: agriculture, inflation, money and banking, public finance, external sector, infrastructure, industry. So all those things are covered in the volume 2. In that volume 1, some specific issues are taken and a detailed analysis and suggestions are given about those issues. So there are 2 volumes. Volume 2 has a more of data and is more important for the prelims. Volume 1 is more important for the mains because this has more of analytical perspective. Budgeting, right? So budgeting, how it is different from the budget? So budget is a document. Document gives the estimate about the revenue and expenditure for the coming year. That is the budget. And the process which is used to prepare the budget, which is used to calculate the estimates, that process is called budgeting, right? So budgeting is the process of creating a plan. So budgeting is the process of creating a budget to spend your money, and the spending plan is called a budget. So it is not only spending plan but also how to raise the revenue. Creating this spending plan allows to determine in advance whether there will be enough money to do the things or not. Now, very important, the types of budget. This is very crucial and I will discuss you with simple examples. First, there is line item budget or line item budgeting technique. So these are the 5 different techniques. Sorry. First is line item budgeting, right? So in line item budgeting, we take out certain, all the important areas. For example, health, education, sanitation, housing, roads, etc. And similarly, we do it for the other areas. So we are basically, making one line for each area, and we are estimating that, okay, 1,000 rupees, 2,000 rupees, 3,000 rupees, and so on. There are different expenditure, and we are calculating, okay, this much is the requirement of money which is to be raised. So this is line item budgeting. We are giving one line item to each expenditure, right? Second is traditional budgeting. traditional budgeting is an extension of the line item only. So here we basically refer to the previous year expenditure. Suppose these are the actual expenditure of the 2018. So when we are making the budget of 2019, we will see, okay, in the health last year there was 1000 rupees expenditure. Now let us increase this expenditure by 100 rupees, and now the health expenditure will be 1100. In the education last year there were 2000 rupees expenditure. This year let us increase by 5%, and this will be 2100 rupees. In the sanitation last year there was 3000 rupees. Now let us increase by 10%, and this year will be 3300 rupees, right? So what we are doing, we are taking the figure of last year and adjusting, right? Putting, adding some amount, or at some time we can also reduce some amount from the previous year figure, and we are determining the budget of the current year. So current year budget is completely dependent upon the previous year budget. Current year budget is completely linked to the previous year budget. What is the benefit? The benefit is that it is very easy to calculate. So ease in calculating the amount. But there are many issues with it. And the most important issue is that if in the past year some amount was put inefficiently, some amount was spent inefficiently, this year also the government has to blindly spend the amount even if it is not required. So there are various possibilities that amount may be spent even if it is not required in the actual life. The second drawback with the traditional budgeting is that here the focus is upon the amount being spent. The government will say, we spent 10,000 crore rupees on education, we spent 20,000 crore rupees on health, and there is no accountability of the government that where this money is going, whether the money is effective in creating the ultimate output for the society. अगर अपने एजुकेशन पे 10,000 करोड़ रुपीस खर्च किए हैं, तो क्या उससे रियली लिटरेसी रेट बढ़ रहा है, क्या उससे स्कूल का इंफ्रास्ट्रक्चर इंप्रूव हो रहा है, उस सब की बात नहीं होती है. तो ट्रेडिशनल बजटिंग में सिर्फ क्या अनाउंसमेंट होती है कि सर हमने 50,000 करोड़ रुपए दे दिए हाउसिंग के लिए, हमने 1 लाख करोड़ रुपए दे दिए रोड्स बनाने के लिए. सो उस तरह की बातें आपकी ट्रेडिशनल बजटिंग के अंदर होती हैं. तो ट्रेडिशनल बजटिंग में सबसे पहली बात तो it is dependent upon the previous year. Secondly, it is focusing upon the amount of expenditure rather than focusing upon how much output has been created as a result of the expenditure. Now, third kind of budgeting. The third kind of budgeting is called performance budgeting or performance based budgeting. So here the name itself says performance. So it is focusing upon output. So unlike traditional budgeting where the focus was upon how much expenditure is being done, here the focus is upon how much output will be created. So now we will say we will spend 100 crore rupees on education, and in this 100 crore rupees there will be 100 primary schools, 50 colleges, 2 medical colleges, like that, right? So here the focus is also upon output. In reality, what is the creation, what is the ultimate outcome? So focus is upon the performance. Fourth item is, the fourth kind of budgeting technique is outcome based budgeting, right? Why outcome based budgeting? So the problem with the performance budgeting is that you are saying that we have created 100 primary school, you are saying that okay, we have created 50 colleges, we have created 2 medical colleges, but how much benefit is reaching to the ultimate citizens? How many people are getting admitted into the primary school? How much literacy rate is increasing? How many people are admitting to the colleges? How much higher education enrollment is increasing? So that is the outcome is not taken care of in the performance budgeting. So in case of outcome budgeting, we are focusing upon expenditure, output as well as outcome. So in case of this example, we will say that in the primary schooling, we will increase literacy rate by 5%. In the higher education, we will increase higher education enrollment by 10%. In the medical colleges, we will produce extra 500 doctors in a year. Like that. So this is the ultimate outcome. This is the ultimate outcome. This is the ultimate benefit reaching to the society. So here, there will be more accountability. This is a visible form. This is a visible form of benefit reaching to the society. So that is why this is called outcome based budgeting. So in the line item, we were just calculating how much is expenditure required for each line. In the traditional budgeting, we were comparing with the previous year and adjusting the amount in that previous year figure. In case of performance budgeting, we are focusing upon the output, and in outcome based budgeting, we are also focusing upon the ultimate outcome. Next, very important, zero based budgeting. In case of zero based budgeting, there is no reference to the previous year. So we are starting the calculation from scratch. We are starting the calculation from the scratch. No reference to previous year. That means each and every ministry has to justify why it is demanding any money from the government. So if the health ministry says that we require 500 crore rupees, it cannot say that, sir, you provided me 400 crore last year and this year I want to spend 100 crore rupees more. No. The health ministry will say, sir, I want to create 10 medical colleges, I want to create 100 new hospitals, I want to create new vaccines, I want to create this, that. So the logical justification has to be given, not linked to the previous year. So this will allow the government to really see whether the money is really required. Each and every government agency has to justify why the money is being demanded from the government. So this is much more logical. This is much more you can say practical. This is much more effective. And here very important thing is there, accountability. The government agency which is demanding the money is accountable. That government agency has to justify, it has to give the account where the money is being spent or not, right? So this zero based budgeting is from the scratch, and this is very logical, and it brings lot of accountability and transparency. So it brings accountability and transparency both. Line item budgeting, the various items are grouped according to their nature. So all the items related to the education are grouped into single item. All the expenditure related to the health sector are grouped into health expenditure. Traditional budgeting. So traditional budgeting is a method of preparation of the budget in which last year's budget is taken as the base, right? So primary focus is upon last year's budget, and accordingly the future expenditure is done. Performance budgeting is an output oriented budget. emphasizing the accomplishment rather than the means to accomplishment. So focus is upon accomplishment. How many colleges, how many schools. Outcome budgeting, outcome is not just the physical output of financial input. Outcome refers to the benefits, right, that arise out of physical output from the respective financial input, right? So can we say, in case of traditional budgeting, the focus is upon financial input, that how much money we are spending. In case of performance budgeting, the focus is upon physical output, that how many colleges are being created. And in case of outcome budgeting, the focus is upon actual benefit to the common man, right? So from financial input to the physical output to the ultimate benefit. These are the differences. Performance budgeting was introduced for the first time in 1975. Outcome budgeting was introduced for the first time in 2005 as far as India is concerned. Zero-based budgeting, the technique which requires the organization while preparing its budget should not take earlier year expenditure. So there is no reference to the previous year, but should start afresh, that is from the scratch. This concept implies that a complete re-examination of the ongoing programs is required. So if expenditure is being done on MGNREGA, every year a fresh assessment has to be done whether the expenditure is really required in the MGNREGA or not, right? So this is most logical budgeting activity. There is one more term you would have heard multiple times, that is gender budgeting. So gender budgeting, what is gender budgeting? Nowadays the government is focusing a lot of attention on women empowerment, and financial empowerment is very, very crucial if we really want to empower the women socially and emotionally. So to provide welfare to the women, out of the union budget, certain amount is kept specifically for the women welfare, right? So there are various schemes which are working specifically for the women, or certain amount is kept for providing them as loan. So the budget is union budget only. The separate budget is not prepared for the women, right? Inside the union budget only, the amount is kept separately for the women welfare through different schemes, through different other areas. So all this process, all these activities, all this process is called gender budgeting. So when we are keeping aside certain money for the gender empowerment purposes, especially for the women empowerment purposes, so that all those initiatives are called gender budgeting initiatives. So this is what we call as the gender budgeting. So don't get confused. This is the very easy aspect. There are various budgetary reforms which were introduced in the 2017-18. You should know about them, although they will not be asked in the examination, but you should know as a student of economy. First, the date of budget presentation was advanced from the last day of February to the first day of February, right? And why was that done? So that there is no requirement of vote on account, right? And the budget approval is ready, the budget is ready to be executed after the approval on 1st of April, so that it can match with the sowing season of the India's agriculture sector. So this budget can benefit to the agriculture sector when it is ready to be executed in the month of April. And there is one more logic, that if the approval is granted in the month of May, like when budget was presented on the last day of the February earlier, so earlier what used to happen, the budget was ready to be implemented in the month of May, the money was sent to the government agencies in the month of May, and June onwards, June, July, August, September, these are the monsoon month. Because of monsoon, various infrastructure initiatives cannot be taken. For example, roads cannot be constructed, bridges cannot be constructed. So all the expenditure is actually not done during this time. So virtually from April to September, no amount is spent. So for the first 6 months, no money is spent, and in the last 6 months, entire money is spent. So virtually this provides very limited window for the government agencies to execute the policies and programs, and because of that, the infrastructure activities are not adequately executed. We don't have the good infrastructure, agriculture sector lacks the money, and all these problems we have to face. After the budget has been preponed from last day of February to the first day of February, and the process of approval has been fastened, we can actually increase the efficiency in implementation of infrastructure programs, as well as the money is ready for the agriculture sector also, right? So these are very, very important. There is one more term which I want to discuss, that is March rush. What is March rush? So basically, whenever budget is approved, some money is allotted for each and every item. So for example, the government allocates 10,000 crore rupees to the sanitation sector. Now this money is available from 1st of April 2020 till 31st of March 2021. So 10,000 crore rupees has to be spent during this 1 year. Now actually what happens, during the first 11 years out of 12 months, only 2,000 crore rupees have been spent and 10,000 crore rupees are pending. Now as per the rules, these 10,000 rupees, if not spent by 31st of March, will not be available to be spent next year. They will lapse. So this is called lapse, right? So this 10,000 crore rupees which has been allocated is basically lapsable expenditure, lapsable amount. That means if the amount is not spent during the given period, then this money will have to be returned back to the government, or this money cannot be spent in the next year, right? So coming back to the example, in case of sanitation program, on 1st of March, that is on the completion of 11 months out of 12 months, only 2,000 crore rupees have been spent. Only 30 days are left to spend 8,000 crore rupees. So this March month becomes a month when all the government agencies are ready to spend money. They want to spend money. They want to spend money. They are disbursing the money. They are paying to the contractors. They are fast executing the projects. But suddenly spending 8,000 crore rupees in 1 month, when you are spending 2,000 crore rupees during 11 months, this sudden expenditure actually reduces the efficiency. It reduces the efficiency, and because it reduces the efficiency, this is called March rush expenditure. So if you hear the word lapsable expenditure, lapsable amount, just understand that if the amount is not spent during the allotted time, then it will be returned back to the government. And March rush means all the government agencies rush to expend the money so that the amount do not lapse at the end of the 31st of March. Right? Next reform was the railway budget was merged with the general budget. Right? So this was done as per the recommendation of the Bibek-Debroy committee. So Bibek-Debroy committee was constituted by the government for the railway reforms. Why the railway budget was merged with the general budget? So before this we need to understand why at all the railway budget was separate from the general budget. So railway budget was separate because railway budget was having a huge amount of expenditure and the income. So the quantum of the railway budget was very, very high when it was introduced earlier around 1921. So in the 1921 the quantum of railway budget was very, very high. Now when we have efficient road infrastructure, we have many other options, the quantum of railway budget has been reduced. This is the one reason. Secondly, through the railway budget, the railway ministers, they under pressure or just for the sake of giving some news to the media, they have to announce lot of trains on the railway budget time, even if they know that the trains are not going to be running, even if the trains are not required, but still the railway ministers will announce a train especially for their own areas. So you can take the example of Lalu Prasad Yadav. So Lalu Prasad Yadav announced lot of trains for his area, right? I'm not against Lalu Yadav. I respect him for whatsoever he is. I am no one to say anything about him, but I am giving you an example. So don't think that I am against Lalu Yadav or pro Lalu Yadav or pro Modi or against Modi. I am completely apolitical as a teacher, right? I might have my personal views, but as a teacher I am completely apolitical. Coming back, so the railway minister will always announce some trains. So this merging of the railway budget with the general budget has reduced the significance of the railway budget, and the finance minister is not under pressure to announce the trains even if it is not required. Right? So this is the second reason. The first reason was the quantum of the budget has been reduced as a percentage of the general budget. Second, the unrequired and populism expenditure, which was completely undesirable, has been stopped. Third, this railway budget is talking about the railways, right? And in the railway there is huge deficit, and that deficit has to be financed from the Ministry of Finance through the railway through the general budget. So the railway minister will demand the money, finance minister will say I don't have the money. So there will be some kind of friction going on in between. So there will be departmental issues happening within the government itself. So even if the government is from the same party, but there will be departmental issues happening within the between the railway ministry and the finance ministry. So these departmental issues will actually hamper the overall efficiency of the working of the government. So to avoid this kind of problem, this general budget subsumed the railway budget, right? So this is the railway budget. Then merger of the plan expenditure and the non-plan classification. What is this? So although we will discuss this issue in the next session, but let me give you a glimpse. Till 2017-18, the expenditure done by the government was divided into plan expenditure and non-plan expenditure. The plan expenditure means the expenditure which is as per the 5-year plan. So if the 5-year plan has introduced some scheme in the education sector, all the money which is given to that scheme is part of the plan expenditure. Now what is a non-plan expenditure? non-plan expenditure means the expenditure which is done on regular activities like giving salaries, interest payment, defense expenditure, all those things. So they are non-plan expenditure. Now, this plan, non-plan classification was not serving any purpose. It was not serving any purpose. In fact, this non-plan expenditure was, increasing because of increase in interest payment, increase in defense payment, and so on. And whatsoever amount was not part of the government scheme, even if that amount was required, even if the government wanted to focus on some special sector, that amount, even if it was part of the welfare, it was part of the developmental activities, it was classified as a non-plan. So the general perception became that plan expenditure means developmental expenditure and non-plan means non-developmental. However, in many cases, as I told you just now, in case of non-plan also, there was some expenditure which were required, which were for the welfare, which were for the development, but have to be classified into the non-plan just because they were not part of the 5-year plan. They were not, forecasted by the government in the 5-year plan. So even if the expenditure is developmental in nature, but still it is classified as non-plan, and general perception was that non-plan was avoidable expenditure, it should not happen. So this plan expenditure, non-plan expenditure, this was creating unnecessary controversy, this was creating unnecessary misunderstanding in the general public, in the economist also. So this classification was abandoned. Now there is no plan, non-plan expenditure. There is one more reason why this distinction was abandoned, because earlier there was 5-year plan system. Now there is no 5-year plan system. Now we have annual budget, and the planning commission has been replaced by the Niti Aayog, and the Niti Aayog is having 3-year agenda, 7-year strategy, and 15-year vision framework, right? 3-year agenda, 5-year strategy, and 3-year agenda, 7-year strategy, and 15-year vision document. There is no concept called 5-year plan, right? And the Niti Aayog is unlike planning commission. Niti Aayog do not have any fund disbursing power. It does not allocate any kind of money. It is just advisory body. It is just expert body. Unlike planning commission was fund allocating body. Even if it was advisory body, but still it had a lot of execution. It used to perform a lot of executive function, right? So coming back to the plan, non-plan expenditure, one reason was that it was creating misunderstanding. Second reason was that because planning commission was abandoned in 2015, so there was no need to classify the expenditure into plan and non-plan. Now the focus is upon revenue expenditure and capital expenditure rather than plan expenditure and non-plan expenditure, right? So we will discuss about revenue expenditure and capital expenditure in the coming session. So from the financial year 17-18, the consolidated outcome budget, right? So I told you outcome budgeting is the focus nowadays. For all the ministries and departments was prepared by the Department of Expenditure in collaboration with the Niti Aayog. So Department of Expenditure is part of the Ministry of Finance. So what is ways and means advance? Ways and means advance is basically a short-term advance which is given by the central bank, that is RBI, to the central government, right? So RBI or central bank is the banker of the government. We already know about this. Many times the government balance with the RBI comes to negative. That means it comes below 0 rupees. So in such cases, RBI makes the payment on behalf of the government by giving the advance to the government. So this advance is called ways and means advance. So RBI acts as a banker to the government. We already know about this. We already discussed about this in the banking sector. it receives and pays money on behalf of the government. If the balance goes negative, RBI lends short-term interest-bearing advance. The key point to note is that it is interest-bearing. So the central government will pay interest to the RBI, to the government. This is called a ways and means advance. So ways and means advance. Advance means a short-term loan. Advance means a short-term loan. Special floating and other loans. Floating loans basically mean where the rate of interest is not fixed. The rate of interest keep changing depending upon a particular factor, right? So this is the floating loan. So these are loans to raise money and their interest is subject to revision periodically. So interest rate is revised, right? So if we say fixed interest rate, that means the interest rate which was fixed at the time of giving the loan. And floating interest rate means the interest rate is revised as per the agreement between the loan giver and the loan receiver. Then we have securities against small savings. Securities against small savings. So there are various small saving schemes of the government. For example, Kisan Vikas Patra, etc. and so on and so forth. So against these small securities, the government issues, against these small savings, the government issues various securities. So these securities are also part of the internal borrowing, and out of this fund, 20% of amount is invested in the central government securities. Compensation bond. So various kind of bonds are issued by the government to compensate for various things to the individuals or the institutions. So bonds issued by the government to the affected persons by its policy decision. So many a times you might have heard about the land acquisition policy. So when government builds some infrastructure project, the government might require the land of the different individuals. So at that time, the compensation bond can be given to different individuals, right? Multilateral loan. Multilateral loan is part of the external borrowing, right? So this multilateral loan and bilateral loan, they are part of the external borrowings. External borrowings means the borrowings from outside India. So multilateral loan means loans received from multilateral agencies like International Monetary Fund, World Bank, etc. Bilateral loan, the loans raised from the foreign governments directly, right? So foreign government, it is basically bilateral means from one country to another country. So when India is taking the loan from USA or Japan, right? So that particular loan is called bilateral loan. Now this small saving scheme, this is part of the other than borrowing receipts, right? So in the capital receipts we discussed that capital receipt can be of two categories. One is debt receipt, another is non-debt receipt. Inside the debt receipt there can be two kind of receipts. One is the borrowing. Borrowing can be internal and external. So till now we have discussed internal and external borrowing both. Another category inside the debt receipt is the receipt other than borrowing, but they are part of the debt receipt only. So those are the receipt which have been kept with the government by the general public, but actually they are not the borrowing. The government is not going to the general public to raise that money, right? So they have been kept by the public. So these are the small saving schemes. So the small saving schemes currently in force are, for example, post office saving account. So for example, postal department has the saving account of the individual. When individual deposit this money in the post office saving account, this money is kept in the small saving scheme, because this money has to be returned back ultimately to the account holder. Therefore, this is a debt receipt. This is an obligation which needs to be returned, right? This is an obligation which needs to be returned. Post office time deposit. So what is the meaning of time deposit? Time deposit means whose duration is generally not withdrawn by the account holder, which are before the expiry of the maturity, right? So there are two kind of deposit. One is demand deposit, means the deposit which can be withdrawn by the account holder on on the demand. That means at any point of time, the account holder can go to the post office and withdraw the money. Time deposit means a kind of fixed deposit. The person has deposited the money for at least certain period. The period can be 6 months, 1 year, 2 year, and the withdrawal can be done only after that period unless and until there is some emergency. Post office recurring deposit. Recurring means which happens again and again. So every month the person is depositing 10,000 rupees. So this is a recurring deposit. So all the post office accounts, they are the small saving scheme. Why they are part of the small saving scheme? Because they are not the post office is not a bank. So in the recent time, the Post of India Post Payment Bank has been opened, but Post Payment Bank is different from the General Post Office. The General Post Office is basically representing the government of India. That is not a bank, right? We are talking about that. Post Office monthly income account, senior citizen saving scheme, national saving certificate. These are the saving certificates, saving instrument where general public deposits the money and public knows that because this money is lying with the government, it is completely safe. So for the purpose of safety of the money, this amount is deposited by the government deposited by the public in the different kind of saving instrument, national saving certificate and public provident fund. Even the provident fund amount is also part of the small saving scheme. What is the meaning of provident fund? Provident fund is basically the monthly payment which is deducted from the employee's salary and deposited in a account. At the time of resignation or at the time of retirement, this amount accumulates and this given back to the individual, right? And also not only the individual or employee is depositing the money, but an equal amount is also deposited by the employer. So this is provident fund. So provident fund, it includes general provident fund and state provident fund, right? Other accounts, deposits of non-government provident funds. So the private sector government funds basically, right? So these are also part of the other than borrowing, and this is also other than borrowing. Reserve funds. These are funds created by departments to iron out excessive variations, undue fluctuations in revenues by using it as a buffer. So this is a kind of emergency amount which is kept by the government, and this is called reserve fund. Here you can see in the first part of the slide, this picture I have taken from the Union Budget 2021, which was introduced in the month of February 2020. So here you can see different items of receipt. In these different items you can see borrowing and other liabilities. So these are the borrowing and other liabilities. Borrowing, it can have internal borrowing, external borrowing. Other liabilities we have seen small saving account, provident fund, etc. Then we have this GST receipt, we have this corporation tax, right? So they are basically capital receipt, and these are the tax revenue items. Non-debt capital receipt we have yet to discuss. They basically include the receipts like disinvestment, the receipts like repayment receipts, right? Union excise duty, income tax, customs, right? So these are various items. In the second half, expenditure items have been given. Since we have not discussed the concept of expenditure, therefore we will not discuss as of now. Now coming to the revenue expenditure, right? In fact, before revenue expenditure, I should discuss this non-debt capital receipt, because this part has been missed in the slide. Non-debt capital receipt. So in the non-debt capital receipt, first there is disinvestment. Disinvestment means the government is having shareholding in many government companies. When this shareholding is sold to some other person, the government receives the money in lieu of that. So this is called disinvestment. Disinvestment. So investment is basically sold by the government. So these kind of receipts are basically called disinvestment. We will discuss this concept of disinvestment separately in a different session. So don't worry, you will get everything. Number two, repayment receipts. So central government gives various kind of loan to the government agencies, to the state government, etc. When this loan is given to them, at that point of time, this is capital expenditure. But when this amount is received back, this is capital receipt. So this is basically nothing but the repayment of loan received from the state government or other agencies to which the central government gave the loan earlier. Right? Now coming to the expenditure part. So till now we have covered the receipt part completely. Now we will discuss about the expenditure part. In the expenditure, there are two kinds of expenditure: the revenue expenditure and the capital expenditure. What is the meaning of revenue expenditure? Revenue expenditure means the expenditure which does not impact the asset and liability, and which is normally incurred for day-to-day functioning, right? So revenue expenditure which does not result in creation of asset for the government. This includes the expenditure incurred for the normal running, for example, salaries, for example, interest payment, pension, etc. Expenses incurred to provide various services, making interest payment on debt, grants in aid, meeting subsidies, etc. Generally, all the grants given to the state government or UTs and other parties are also treated as revenue expenditure, even though some of the grants may be used for the creation of capital assets. So this point is very simple. Suppose central government gives various grants to the state governments, right? Now this grant, it can be used by the, this is the grant basically to the state government. So this grant can be used by the state government for day-to-day functioning, or it can be used for any asset creation. So utilization by the state government does not define the nature of this grant. If this is a grant is basically kind of donation, it's a kind of gift, it's a kind of assistance, right? It is not a loan, right? So if this grant is given, this will always be classified as a revenue expenditure, right? This will always be classified as a revenue expenditure. It does not matter whether state government is utilizing it for revenue purposes or it is utilizing for the capital purposes. It does not matter. What matters is, if it is grant, it is always part of the revenue expenditure. Please make this point very clear, because many times the question has been asked from this portion. Again, there is one more point: loan. If central government gives any kind of loan, whether the loan is given for day-to-day usage or for any capital creation, this loan is always classified as the capital expenditure.